What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week. We use technical analysis to go over multiple indices. We really look at price action. We look at some breadth indicators, some sentiment indicators, really to get a good idea as to where the stock market might be headed next. Big day in the markets today overall. Let's just go ahead right now and hop into the show. All right, welcome back. I have a lot of charts to go over, so I'm going to try to run through them, and then in the conclusion section, I'll kind of talk about where my head is at during all of this market euphoria. Right now, we're looking at the seasonality chart. What I really want to just point out here is we talked about this prior to the election, and we saw that this big ramp kind of occurs on the election year. We've got that on the way up, these big, huge moves to the upside. I wanted to point out that we're right about here, maybe a little bit, we're still kind of on the way up, but as it comes towards the end of the month, maybe the last 10 days or 5 days or so, you can see really into December, there's a somewhat of a sharper move to the downside that eliminates half of that kind of ramp up there in November. So we got to be aware of this. Doesn't mean that that's going to happen, but going into December looks like it could get pretty, at least have the potential to have some downside. Now I want to go ahead and just point out what the futures market is doing right now as we speak. I screenshotted this so it could be a little bit different, but it looks like it wants to start another gap up going into Tuesday, which is actually not a bad thing. Tuesdays are known for turnaround Tuesdays on Wall Street. So if we have a gap up and then we see the price really just fall to the downside, that could be a signal that we're going to get some more selling pressure into Wednesday. Now let's go ahead and hop into the indices. I want to talk first about the Russell 2000 because this one has my attention fully right now from a selling perspective. Now, why is that? Well, let's get into the charts. The weekly time frame, I want to just point out how it's trading over the upper. I laugh because it's kind of funny. So I took a position in this today. I went short on the gap up today. So right around 180, I got stopped out. Right around, I think it was 181. So not that big of a trade. And then I rescaled in at 182, just below 182. So pretty much tagged the top. And now it looks like we're going to be gapping over that tomorrow. So I'll probably most likely, potentially get stopped out. However, RSI is moving into overbought on the weekly. We're way overextended from the 5 EMA and the upper Bollinger Band. As I stand right now on my rescale in, I'm up like 4 or 5% on the trade, just luckily because I tagged the top. Okay, on the daily time frame, we look pretty bullish. Let's respect the price action. Really strong move to the upside. However, this has created just so many gaps to the upside, and we know what happens when we get a lot of gaps just so frequently like this to the upside. We're in basically a prime area, both seasonality and just from a technical overextension trait, I guess you could say, to have very sharp declines potentially. So now the price action still can move higher. We broke out of this resistance. This little red line that we drew out is between 177 and 180, and we're holding so far pretty strong, but the RSI is overbought. And then here on the 2-hour time frame, I figured I'd point this out. It looks like a rising wedge. I think I've already pointed that out prior. And then we have a negative divergence both in the RSI and the MACD. The last 2 hours formed a shooting star-ish type candle, inverted hammer. So we had a lot of this gap up, strong move to the upside. Now we see a little bit of weakness. Now, weakness needs to be confirmed. So we need to get back within this kind of rising wedge and potentially close this gap. We'll probably find support along the way. It's very hard and very difficult to tag tops in a market and even tag bottoms. So you need to really have a stomach and honor your stop losses if you are shorting into this type of price action when it's moving into all-time highs. Now keep in mind, Russell 2000 outperformed every other index. So the small caps are moving just monster amounts of money. Now I want to remind everybody that bull markets typically end with huge movements to the upside like this. So we need to be, one, honor our stop loss because we don't know how high it can go. And two, we need to be prepared for if there is a sell-off that takes place. Let's look at the S&P 500 now. Okay, daily time frame. We have a bull pennant on the VIX right below us. I want to point that out because if we start breaking above it, that's going to push the market higher. The VIX moves in inverse correlation. I flipped it upside down to make it a little bit easier to read. I want to point out that we did break above the symmetrical triangle. and, you know, we recaptured the 5 EMA. But what I do need to see happen is really get above and hold above this 3,600 to really confirm that this move is a bullish breakout. And we've been struggling to hold above that level. As I see it right now in the futures market, it looks like it wants, instead of just really testing it again tomorrow and really true breakout, it looks like it wants to just create another gap to the upside. So maybe we might get something very similar to that happened in previous days where you gap up and then we fall back down, or maybe we gap and go, or gap and just kind of camp, or, you know, well, I guess we'll see. Here it is on a smaller time frame. This is the 30-minute time frame. I pointed out this resistance before, this 35.90 just below that, and I said on, I think it was Twitter, wherever, if we went below it, we would get the flush to the downside based on prior data. That happened. We got the flush to the downside, and as you can see, we tried to test it there. We tried to test it here yesterday, and then we tried to test and got rejected again today, creating this inverted type hammer candle, which is a reversal type candle. We flushed down to the downside, but caught a little bit of ground towards the end of the day. This right here, up to 3,600, is kind of like a bear camp right there, bear zone. A lot of probably sellers are hiding out within these walls. So that's kind of a resistance to get through. If we continue to get movements in the futures market and we just gap over this, I mean, I wouldn't be shocked, to be quite honest, because it doesn't seem like it can test it and pass it on the cash market. So it's been just known to just move right over that in the aftermarket session. So keep an eye on this area that right now it's holding as resistance, and then we'll have more resistance up at the all-time high. And then we'll have support right here below us at the gap window, 35.40 to 35.45. So if we come down there, probably will hold as some support. If we start breaking below that, start looking for 35.25 to 35.20. That could be another area of support. And if we start breaking below that, that could be kind of a head and shoulders neckline that could potentially be breaking. Now on the 15-minute time frame, you can see a little bit better of this head and shoulders pattern. This I've had up for quite some time now. Keep in mind, look at the VIX. The VIX has just been really just compressed to the downside down here. And we have the double dragon pattern, right? For those who know what I'm talking about, the left shoulder, the head, the right shoulder sharing with the dragon head, but that's obviously just a joke. We have left shoulder, head, right shoulder. It's still holding within this pattern and a symmetrical triangle. If we start breaking above this to the outside, you know, be prepared to make once again all-time highs in this index. If we start cracking below it, maybe that's when we'll start seeing some selling pressure take place. Let's look at the Dow Jones. The Dow Jonesy. Weekly time frame right here, okay? We're on the upper range of the Bollinger Band, disconnected from the 5 EMA. We did break through this little resistance trend line. How did we do it? We gapped over it. We have a negative divergence in the stochastics here. Last time it happened was right here. March crash. It doesn't mean that that's going to be taking place again. You know, once we get into the indicators, sentiment's so bullish, it's crazy. Breath is, everything is just, you know, everyone's going all in right now. Stock market only goes up, right? Stocks only go up. Let's look at the daily time frame. Negative divergence on the RSI, pretty long. MACD looks like it might start curling over here. I mean, it's losing some momentum here on the histogram. We broke out and we're holding above this high previously. It's 29,200. So that's good and for the bulls. And we also recaptured the 5 EMA. Now, obviously, this is just a bunch of backwards and forwards, back and up and down chop. So, you know, take it for what it is right now. This is where, you know, the last video really came into play where I said buckle up because we're going to have some pretty insane price movements coming up here in the near future. As you can see, we're seeing big swings in the market. Moves like this aren't typically normal, but yet they are becoming somewhat of a new normal. It's very interesting. A lot of the news today was really based around that. Over the weekend, there was some more news, positive news, optimism around the vaccine. And then I think today we had, what was it? The Federal Reserve, Janet Yellen, Biden picked for the Treasury Secretary, and the market seemed to somewhat take that as good news, and it was really just all chop back and forth today for most of the indices other than the Russell 2000. Here it is on the 15-minute time frame. That's the Dow Jones head and shoulders rising wedge pattern. Gotta keep an eye on this one. If we start moving into that overbought territory, we might on the RSI we might start then very well potentially cracking down this, but we got to keep an eye on this. Like I said, the futures market's kind of ripping and roaring right now, but that could be a fake out. That we can definitely turn negative in the futures market still. It's happened plenty of times in the past, but I haven't seen a gap down for what feels like a century right now. Look at the NASDAQ 100. I'm only going to look at the daily time frame on the NASDAQ 100 just because really it hasn't been doing much, okay? It's been holding up at this line right here, this upper symmetrical triangle line, which is not a bad thing by any means. This is actually basing out for a potential move to the upside. Now, the stochastics is dying out just a little bit, but the RSI is just trending straight there right above 50. So there's not much going on. It's sitting on the 5 EMA. I honestly think that we're probably going to just get, it's going to look like this, okay? If we start breaking below 8,800, that's going to probably flush us more to the downside. But if we start breaking back above this upper range right here, which seems to be 12,000 is the tight holder right there, then we could start maybe potentially swinging back up for an all-time high. But keep in mind, we still have this gap above us, and really to start seeing some momentum change and really have it in the bulls' favor, they're going to have to start closing above the all-time previous high, which is up here at like 12,400. Now it's time to get into some indicators, okay? This is where I'm going to go over some sentiment indicators and some breadth indicators to really help you understand, the bigger picture, okay? VIX right now, it's inverse correlated to the S&P 500. If it goes down, that means the S&P 500 could go up. Now, this is a falling wedge. That is a bullish type pattern. So if we start pressing up to the upside, that's going to bring those indices down. If we look where we're at right now on the VIX, you can see that it's acted as support before, and we got squeezed up. Almost came down here, squeezed up. And then this is where it gapped clear over it, and then we really started to move up. So we're at this very interesting area right here. We also have this gap that's just been below us for quite some time. Most gaps, they do typically get filled in the VIX, and it's unlikely to see them kind of open for a very long periods of time. So maybe we might fill this gap, and that's when we start seeing some big changes. But I'm not too sure, so take it with a grain of salt. This is just one of the obviously this is a sentiment of the market right here, and some people say don't even use technical analysis because it doesn't really matter. I like using it because it does tend to work really well the way that I use it, where you can bring up Bollinger Bands, you could bring up on smaller time frames, and you can look at support, resistance, and even patterns typically tend to play out. So we'll keep an eye on this falling wedge. If we start breaking above it, I think 2750 would be the area where we might get snagged up again, which could put some pressure. Maybe we get one solid candle up to the upside, and then that could really create some pressure to the downside. Now, here's another sentiment indicator. This is the CPC. This is a put to call ratio total, where it takes in equity like stocks and then also the indexes. Now, I smoothed it over a 10-period moving average. I call this the sell signal, sell indicator, whatever. When it crosses below the red line, that's more of the warning, like, okay, now let's get prepared because we might be moving into a territory where sentiment, it's too bullish, and we might starting to see a shift where we can become bearish and take a higher probability trade. So when it crosses back above that red line, when the 10-period moving average crosses back above it, that's the quote-unquote sell signal. So it's basically saying, hey, make sure you're taking some profits off the table. Make sure that you are moving your stop losses up if you're on some long positions, etc. Now, when we cross above, we can see here, boom, it went to the downside, crossed above, boom to the downside, crossed above, a little bit down to the downside. That was a pretty fast snapshot, boom to the downside, then right here down to the side a little bit. Now we're moving back into that warning sign. It looks like it's going to reach there probably within a day or two, probably this week. And that kind of lines up with the seasonality chart going into the end of the year. Okay, we can stay down here and not cross back above for quite some time. Look at here where it crossed above or crossed below mid-July. We didn't cross above till, the beginning of September over here. So keep that also in mind. Here is the NASDAQ. You know what? Actually, I'm going to go over that one in a second. What I want to first go over is back to the CPCE. This is on a monthly time frame. I showed this chart many of times, but it rarely comes down here on the monthly time frame. It has 4 times since 2004, basically. And when it does, we typically see big swings of volatility back and forth. Here is, measured from the very high peak to the low peak. And the following 5 months from when it hit it was down 7, then 20, then 17. And right now I did the math. We're like from the high peak to the low bottom, it was about 12% swing from measuring from the top to the bottom, so minus 12%. And if we keep moving higher, obviously that spread's going to be increased. All right, so this right here is the NASDAQ 100, right? So it's the 200 period moving average. How many percent of stocks above the 200 period moving average? And right now it's saying 85% of the stocks are above the NASDAQ 100, 200 period moving average. Oh my gosh, I made that difficult to understand. So 85% of stocks are trending pretty significantly above the 200 period moving average. And really when it reaches these levels, that's why I'm pointing out, you'll see these blue lines going down the screen. When it reaches 85%, it's relatively a high number. It means that we're kind of overextended. We could see some downwards momentum. So you can see here when it got starting to get in above, it can hold there for quite some time, but then we saw that move to the downside. Same thing right here, boom, sharp decrease. We saw that spike to the downside here, and then right over here too as well, okay? There's also the S&P 500 chart. This one I just did a little bit differently. So you have the 200 period. This is the percent of stocks above the 200 period moving average and then above the 50 period moving average. And once again, we're still climbing here. Almost 90% of the S&P 500 stocks are above the 200 period moving average. And then same thing with the 50, 80% of the stocks. When they reach these high levels together, we typically see moves to the downside. So things are a little stretched out here, to say the least. Here is the NIMO, the McClellan oscillator, another breadth indicator, printed at 50.11. So breadth is bullish, but keep in mind where we still stand. This is still a double top. Last time we did this, we had a double bottom, and that's when we saw this really sharp move to the upside. Bulls are really holding up right now, and it seems like everyone, like I already said, is extremely, extremely bullish. So we need to just determine best for ourselves, hey, is everybody all in on the bullish trade already? And now is it start time to considering the more bearish side of things? And in the conclusion, I'll kind of talk more about my thought process there. Whoops, wrong chart there. Let's look at this one. This is the NI high low. This is the high low index printing at 93.15. When we get sharp moves to the upside, typically this number is pretty overextended. Now it can hold up there for a while. These are lagging indicators. But if we start seeing sharp declines to the downside, as you see with these blue dashed lines, we can see pretty sharp declines as well. All right, so that is all I have for the indicators. Let's look at commodities very quickly. Gold dropped down, but it didn't hold into my buy zone. Honestly, we broke down through that 1850, 1860 level. I think that we might still have room to fall here. I hope I don't miss out, and this was just kind of a false breakout, but this is a pretty bearish looking candle. It didn't close in my buy zone, like I said. I had my finger on the trigger to buy some more gold, but I held off. I kind of want to see what the rest of the week brings just in case, and I'm okay with that. The 200 period moving average is sloping still up, and we have this lower trend line right here, and then we have the breakout area too as well. So hopefully, I would like to see a very, very sharp, aggressive move to the downside, really getting our indicators overextended, and then I'd like to buy in from that point. Silver down 3% on the day. Also, it's kind of holding around 2360, so it hasn't quite broken down to the downside quite yet. Inverse head and shoulders still held up. Clearly, they're struggling to get above the 50 period moving average, and if you get past that, you still got this neckline to get through. I think this inverse head and shoulder pattern probably might just get busted, and we'll go back to a descending triangle, and we'll be keeping an eye on it. MACD crossed over to the downside. It doesn't look too healthy for the precious metals as of right this moment. Oil, on the other hand, this is light crude WTIC. We broke above the upper portion of this risk range. Now we're heading into $45. If we start breaking above that, hey, that's probably why you're seeing energy stocks and everything in that energy sector really push for. The energy sector was the best performing sector. I think it was up around 7% for the day. Let's look at the dollar. Hey, look at this. This is pretty interesting. The dollar came down to 92 on the nose today, on the low, bounced from that area and came and closed right around, where did it close? 92.49, right around 92.50. Now, if we start moving to the upper portion of this channel, well, what do you think is going to happen to gold and silver? Right? Gold and silver are probably going to continue to drop and go lower. Now, overall, though, the context of the dollar right now is still bearish. It looks still like it's walking this plank. Obviously, it's playing, footsie with the 92 level. If we start closing below 92, that could be, it could be, it's just not going to be the greatest for the dollar because that's a pretty strong area of support there. Quickly look at yields, up slightly for the day. The 30-year hasn't broken back above this trend line right here, and you can see that the 10-year is actually holding still to the trend line. This was the 30 minus the 5. The spread was tightening, and you can see if it goes below 0, it gets inverted. This was a rising wedge I pointed out, and we kind of broke below that, so it was kind of interesting to see a target area of down here around 0.7 to see if this actually holds true and the spread gets more narrow here in the near future. So let's talk about the conclusion. Let's wrap it up. Let's wrap this up. Really, overall, so what am I thinking? Really, my eyes right now, given the breadth, given the sentiment, given the price action of all these charts, in my personal opinion, at this particular point in time, everything is very, very overextended to the upside. So it doesn't present too many buying opportunities for me specifically in the indices. There's individual stocks that do look good. I called one out on the weekly scan called SPCE, and it was up like 6% today. Pretty darn good. Now, I'm going to bring up some charts here and kind of go over this, but really my eyes are on the Russell 2000, and it's on the sell side of the Russell 2000, so I'm going to have tight stops, and I'm going to try to catch an aggressive move to the downside, and then when we pull back to areas of support, I'm going to be looking to go long on various stocks and or indices such as potentially the SPY, or even potentially the NASDAQ. So I haven't fully decided that yet, but I'm looking at major areas of support to buy into because I'm still overall thinking that the market, we're probably going to get some big rally towards the end of December or mid-December to the end of December, and then maybe we might see what I've looked at a post-election S&P 500 seasonality chart. We see some pretty aggressive moves to the downside in February, but typically December into January is not too bad. So I'm going to be looking at buying up into areas of support, but as I stand right now, I'm looking at more of capturing a sharp aggressive move to the downside because I think it's very likely. This is the Dow Jones Transport, and I'm just showing you this just simply because we keep moving higher in these indexes, and we're doing so on a negative divergence in both the MACD and the RSI, and we kind of have a rising wedge pattern. This is a line chart, so take it with a grain of salt. It looks a lot different if you're starting to pull up candlesticks, which you can do. Just look that up on stock charts, pull up the candlestick chart, and you can do it yourself. But I just wanted to point out, yes, it is moving up and up, but it's doing so on negative divergences, so it's not too healthy to me at this particular point in time. The semis I also talked a lot about on my weekly scan videos. If you haven't watched that, watch that. Rising wedge, negative divergence. Semis saw a pretty big rip today, especially the stock that I talked about, AMAT. I actually took a short position in AMAT at $80, and probably I just looking at the futures and looking at what's going on, I'll probably get stopped out. But that's okay because that's part of the process and part of the plan. These extended moves to the upside, there's going to probably be a pretty dramatic move to the downside, and I want to be able to catch that move with as little risk as possible. So I'm keeping my eye there. And like I said, seasonality chart, having my eye on it. This is the election year seasonality chart. Eventually, I'll start bringing in post-election seasonality charts. And really just, I want you to see here this big sharp move towards the end of November into December. It's going to be interesting to see what happens. I did see some news come out that it looks like the election they're conceding. Somebody came out and said, yeah, they're going to go ahead and move ahead with it. I'm not, don't quote me on that, but I saw some headline and I didn't really read too much, so it's just a headline to me. But thought I'd share that with you because that could be, I don't know if the markets are going to take that as good news or bad news or what the case. But, I'm working with the tools that I have right now. Like I said, Russell 2000, I'm on the sell side, looking for those overextensions. If I get stopped out, I get stopped out. Not too worried about it, just because I know that everything right now is very, very extended to the upside, and it seems like everyone's just way too bullish. Way too bullish. And if I miss moves to the upside, that's okay to me because my capital is being protected. So, yeah. All right, everybody, that's all I got for you today. Have a good day.